Most investors lose money not because they pick bad markets, it's because they skip steps in their analysis and they don't stress test it. So what I wanted to do is share a checklist that I use and the process I go through on every deal. So let's go ahead and start with a new deal right here. We're just going to pick out a random property from Redfin here and paste that in. We're going to extract that data. Okay. So we have our data here. Everything looks good except, whoa, that can't be right. All right, my wife is from Austin, Texas, and their property tax is really high and it's not that high. So we can fix that a little bit later, but let's apply that to the form here. Okay, now we have our property in there. We're gonna hit next and go on to the financials here. Before we do that, again, I mentioned a checklist here. So we're just gonna kind of go through these. We already have purchase price. If we go back, closing costs 2 to 5%, let's just call it 6,000. Okay, we're not doing anything. This is going to be turnkey. We're going to assume no repairs. Okay, so we can check that one off. Now we're going to go to market rent. Okay, so I use 3 different things generally to calculate approximate rent. The first thing I do is look at Zillow, the Zestimate there. Now again, I don't really find Zillow very reliable with some of theirs, even their Zestimate home prices. So I don't really find their rent reliable, but it gives you a baseline. So let's go ahead and bring up that property that I already had, and we're going to check out the Zestimate rent, 2,200. Okay, so I mean, in my mind, that seems low. I am not super familiar with that market, so I don't know. Maybe leave a comment if that seems on point to you, but let's use it for the sake of this. Actually, we'll go up to 2,400 in there because that seems more realistic to me, but we're just playing imaginary games here. So 2,400. Other income, like if you have a laundry, coin laundry or something like that, you can put that in there. Vacancy rate 5%, sure, that seems fine. Here's our crazy property tax. Before we do that, let's check that out. Vacancy, check that off. Operating expenses, yep, we're about to get to that. Okay, that seems, let's remove a digit, and that seems more like it. Insurance, let's say 1,200. Okay, maintenance per year, let's say 1,000. Management fee 8%, pretty standard there. Other expenses, I'm gonna say that probably came in from there. We'll just delete that for now. Maybe we'll just go 500. Okay, and then we'll go to next to the financing. Let's check off our operating expense. There's financing. Okay, let's talk about that. So conventional loan, yep, that works. Down payment. So usually if it's an income producing property or rental property, you're gonna sometimes see 25% down on that. They're gonna wanna see that. Interest rate, that's maybe about right. That seems high. Let's check it out actually. So let's go ahead and save this as a draft. All right, we're going to close this and we're going to go to the rates. Okay, conventional 6.8. Okay, this one might be a little higher, but that's okay. We can resume. We'll go 6.875. Perfect. Okay, loan amount, great. Amortization, good. All right, we're going to go to the next part here. Close that out, and we're going to open up our card. All right, we can close that off, and now we can check out all these here. NOI, cap rate, cash on cash, all of that. So let's go ahead and take a look at that here. Okay, so our gross income 2,700, operating expenses 9,000. I have highlighted here kind of the important pieces. NOI 18,000, cash invested, your down payment and closing costs, etc. And there. Cap rate, cash on cash. Now, if you're not sure what some of these are, we can open this up. A little info tab tells you, or you can kind of come into the glossary here and get a bit more of a thorough explanation on some of these things. We're not going to go into that too deep in this video. So looking at this here, right off the bat, week, okay? Now we want to see what's going on. So annual cash flow minus negative 8,000 here. So not great with that. So we can come down here. You know what? For the sake of this, we'll do this. We can look at the max offer calculation based on that. I mean, target cap rate, sure. I don't know, 6, cash on cash. Drop that a bit. DSCR, we'll say 2. Now this is just taking from the cash on cash max offer. Cap rate, you're looking at 300,000 for the max offer price. That's obviously the seller is not going to go for that. So let's edit this, and maybe I feel like the rent is too low here. Let's call for the sake of this 3,000. Okay. All right, so here we go. It's still weak, but we can come around here and check out some of this stuff. So analyzing the risk radar here, obviously DSCR is low, negative cash flow. Now we're down to 2,000, which is, I guess, more acceptable there. So then we were going to look at, let's stress test this. So it's already in the negative, so you're not going to see big things. So if we have a mild stress test, you know, we can kind of check that out and see where the deal is going to go wrong. If you want to customize it, we can customize it in here as well. But let's do this. Let's close this guy and do a scenario builder. So what if we offered 410? Okay, things start looking better. Okay, vacancy rate, you're very sure of yourself. I'll drop that a little bit. Insurance, maybe you find a great deal. Management fee, 8%. You also found a great deal. All right. You ended up buying a point and interest dropped. Rental income went up a little bit. Okay, now we start to see things look a little bit better. So you can kind of play with these to see where things start to pencil out. So now we're at the 3,800, almost 4,000 with the cash flow. Maybe, you know, aren't big on the expenses. If this had been recently remodeled, maybe you're not spending that much yearly on those expenses. So all things you kind of can play around with there. So let's go ahead and go back. Okay, we talked about NOI, cap rate, cash on cash, stress test it, vacancy, and all that. So again, we kind of went through to check this out, and we know now that this deal is probably something we don't want to pursue because the rent isn't going to be working out. Now, if we do another scenario here, let's pretend that this was short-term. You could short-term rental this. So now we're looking at, let's go per year. Let's see, we'll use mine. Mine's seasonal. I would imagine, but I mean, Boise City, it's probably not that seasonal. I got in my seasonal Airbnb just off of short-term 41,000 last year. Let's say they're 50 then. Okay. All right. So now we'll change the management fee. Let's call it, oops, didn't close that. Okay. 2,000. And management fee, that's going to be way higher. That's going to be 20%, let's say. All right, let's save that. All right, so it looks better. It's still not great. We do have a positive cash flow though. So depending on, you know, where your risk level is, maybe this is a risk amount or a amount that you're okay with. So everything else stays pretty much the same. Again, you can play with the different scenarios and that type of thing with this as well. So that's kind of a rundown of our checklist. I really try to rely on this as much as I can when I'm analyzing a deal. That way I can know if this is something that I want to pursue or not. In this case, I do not. Thanks for watching. I'm going to link the checklist and the tool DealForge down below. Thank you.